What's up, guys? Hope all is well for you here in the last week of July. Bitcoin has, at least for now, started to correct ever since getting to a top of a little over 24K 5 days ago from the time of this recording. And thought it would be a good idea to check in and see what the social sentiment looks like, how the crowd is perceiving the markets here as we head into the FOMC meetings the next couple of days, where the United States Fed discuss raising interest rates once again. This is relevant because United States interest rates can dramatically impact the future direction of equities markets, not just in the US, but in the world. And then when it impacts the entire world, we've seen that that has a big correlation with crypto, especially here in 2022. And until that correlation breaks, we're going to care a lot about how real world capitalism is able to thrive or dive. So we'll touch on the FOMC perceptions in just a moment. Before we do, I wanted to start off by showing the chart of mentions of long and mentions of short on social media. We scrape data from Twitter, Telegram, Discord, Reddit, and some other pro traders chats to get all of this data. In blue here is the amount of mentions of long over time, and red is short, is the word short. Very simple, to the point. We're looking at the past 1 month here for this particular chart to look at instances where we saw big spikes in long interest and big spikes in short interest. Generally, people in crypto, on crypto forums, are there because they tend to be more bullish. So you'll almost always see more mentions of long than mentions of short. However, we see one little instance here where there were actually more mentions of short than there were long. And you'll notice exactly what happened when this happened last week. The price immediately shot up. And pretty quickly we saw less discussion of shorting thereafter as people were less interested. There were 4chan forums going on at this time and some other platforms talking about how prices have to begin dropping again because of the fact that the economies are such a mess, right? And the next couple of days, of course, with the FOMC decision, will help prove whether their convictions are correct. But nevertheless, we look at the spikes on the long side of things, and it kind of works in the opposite way. When the crowd really believes that it's time to long and we have an upcoming breakout, we tend to see prices drop, especially if the long calls are happening as prices are rising. Like here, we saw an immediate drop off. Here, another immediate drop off as soon as it was mentioned a lot. So when the crowd gets euphoric, that's a good sign that the unanimous nature is not a good sign for the future of crypto. We tend to see the crowd's expectations have the least expected results more often than not. Here, of course, was the biggest spike on July 7th. It took about a day, a little less than a day, but more or less like 12 hours. And then we got this big top and it just continued to decline. A lot of people started wanting to long here. Didn't really work out here as well. And then eventually they got things kind of right here. They started talking about longing a lot at an eventual bottom. But you can look at most of these spikes and see that the price was immediately declining after people were talking about longing a lot, especially if the long calls were happening when there weren't also a lot of short calls. So like this was an exception, for example. Look at how it was also one of the highest short spikes. So this was just a time when it was very polarized. But if it's like severely in the favor of longs while shorts are relatively low, that's a sign that the crowd is getting super euphoric. So that's how I look at it. Leave ideas in the comments if you look at this differently. But at least eyeballing it, at least 80% of the time, it appears that a big euphoric spike results in a drop, especially if it's happening without much interest in shorting. So moving on as promised, let's take a look at the amount of discussion related to the FOMC meetings over the past 6 months or so. The first big one of 2022 happened back in January, and there was actually a big rise. Another big one in March, and that resulted in a rise. It was kind of an instance in the beginning of March where it was everyone was selling the rumor of the upcoming FOMC meeting. Then the FOMC meeting confirmed that interest rates were going to rise, and everyone said, "See, I told you this is why prices are going to drop and continue to drop." And boom, the opposite happens, and prices rise. We wait a little bit, minor spike here. Our next big FOMC meeting was in early May, excuse me, and that's when the next big drop happened right after, because here everyone was thinking about March and how they were fooled and thought the prices would continue dropping. So everyone actually got super positive and said it's okay, the interest rates don't matter. Turned out they did, and prices dropped a lot. So the crowd got it wrong once again. Here in mid-June, a lot of mentions of the FOMC. Notice it's a lot smaller though, because already between here and here, many people had dropped out as a result of prices going from 40K down to 20K, basically halving in between these two meetings. So there was still a lot of interest. There was an initial spike, which was interesting. So people were like, all right, well, maybe we're going to see another instance of March happening. Instead, big fake out, and it keeps dropping. And a lot of people dropped out once again and capitulated. Now, going into this next one, we had one minor spike, which could have happened for a variety of reasons. And then the more recent spike, this is only 1 to 2 days before the meetings. So as far as interest this time around, we might see a spike during the meetings, especially if it results in some dramatic price action. But expect polarization and volatility over these next couple of days as the meetings commence. And you can even check down here where they're getting the most discussion. And it looks like Reddit seems to be most interested between Telegram, Reddit, and Twitter of these events. Twitter really not far behind, especially in the early May one. But yeah, I think this is a pretty cool thing to look at because it is definitely a subject that has a real impact on prices. All right, next up, I wanted to briefly look at some different sentiments and perceptions of Bitcoin versus Ethereum versus altcoins out there, even Tether. And this chart in particular is really cool. It shows the social dominance or the percentage of discussion related to an asset compared to the other top assets out there right now. And we're just looking at 7 here to keep it simple. But we can see going back to November, this was basically late October to November. These were, sorry, that's 2020. I want to be looking at 2021. But regardless, the point still stands. There's been less and less interest in Bitcoin compared to the other top assets as time has gone on, especially once we were getting close to all-time highs. The official all-time high, I believe, was the November 8th and 9th, depending on where you are in the world. And at that time, many altcoins were also making all-time highs, and many were climbing percentage-wise even higher than Bitcoin was. So that was cutting into the amount of discussion related to Bitcoin as people were talking a ton about Ethereum, which nearly scraped 5K during that same time. Even Tether, Cardano, Polkadot, they were all seeing big upticks at this time. And it's very mildly, ever since prices started to retrace, it's very mildly gone a little bit back toward Bitcoin's favor. But even now, it's starting to rise ever since mid-June. So over the past month, Ethereum is starting to get more talk as it's had a little bit of price dominance over Bitcoin. And you can tell here, especially just in the past 10 days or so, Binance, Polkadot, they're pretty much all gaining on the social dominance of Bitcoin right now. So just looking at the 2-year span, we can see pretty clearly that Bitcoin's dominance is not nearly what it used to be compared to the other top 6 assets we're looking at on this chart. Another thing I want to check out briefly is the weighted sentiment. Here we're just calculating the balance, which is the positive versus negative uh, commentary on the social platforms that we scrape data on. And that's multiplying it by the amount of unique handles on Twitter, Telegram, Reddit, Discord, etc., that are talking about Bitcoin at this time. In this case, we're only looking at Twitter, but you can, of course, change the source. We have Telegram, Reddit, and Twitter, and even Bitcoin Talk as available options on our graphs.santiment.net/social platform. But yeah, overall, we did see this huge uptick, which turned out to be spam, which is interesting. This shows our spam right up here. So this is talking about the amount of duplicate discussions discussions related to Bitcoin by the same handle. So even though we're looking at unique social volume, it still resulted in a big uptick in Bitcoin discussion and positive discussion, which is very interesting to see. But overall, other than that blip in the radar, it's been pretty much negative sentiment here since early May, since that initial drop where went from 40K in late April down to 20K and even below 20K by mid-June, or I should say, yeah, mid-June. So as far as sentiment goes, that works in long-term bulls' favor. We want the crowd to be against Bitcoin and have little optimism about the price improving. That tends to be when prices do improve, as we saw very clearly here and here. It's not always going to be right, but you can always up the smoothing, kind of make things a little more gradual looking, and you'll notice a lot of trends. So I recommend checking out this URL when you get a chance, bookmark it, and as long as you have Sandbase Pro, you can check in on the real-time data freely. All right, next up, as we talked about weighted sentiment, I'll transition into our weighted sentiment sand sheets model, where we can look at the major spikes in euphoria toward an asset or fear toward an asset. And this is basically looking at the top, I want to say 50 to 60 or so market cap assets all on the same chart, which is super convenient. When you see these big negative spikes, which are most of them right now, as you would expect, in 2022 being a pretty big down year, these are basically showing when there are big spikes in occasional euphoria, and these are occasional fearful spikes. And lately, we've seen a little bit of euphoria for Axie Infinity, so I preloaded that chart, and we can see quite clearly there were some major euphoric sentiment spikes. And if you saw this on the weighted sentiment sand sheets model the past couple of days, it would have warned you that people were getting super euphoric, likely due to a price surge, which is exactly what was happening. And then boom, price corrected huge just about 48 hours ago to where it is now. And that would have been a really good use of this tool. Same here, even right here, everyone started talking about it after a big price surge, and then it immediately dropped, and all of the FOMO that was coming in kind of got lost and had some major losses as a result of that. Another one to look at would be the weighted sentiment chart instead. This basically just shows the percentage above or below its normal average, and also shows the 1 and 7 day price returns of each asset. So we can look at something like Hex I had preloaded for a reason. I think it was because it had a negative sentiment spike, and there was also something over here. Regardless, I'll bring up Hex, and I wanted to hone in on this one because it's getting some major negative sentiment these past few days. Could be due to some real world stuff related to the asset. I know Richard Hart's name has been making the rounds for the last couple of weeks, and he's a very polarizing figure in the Hex, obviously the founder of Hex, and someone who people tend to either love or hate. And he's, I believe, getting some criticism for reasons I don't think are worth bringing up on the video, but it shows that it got a huge negative spike, which is interesting. And usually when that happens, as we saw here, it's more likely for an asset to rise because there's a lot of FUD and capitulation going on, and big holders will scoop up the small holders' drops in the asset because they don't believe in it anymore. And the whales are like, sure, we'll take that off of your hands, no problem. Prices rise. So it's been mostly negative. We did see a few positive spikes. This was right before a local top. This was at a local top. And now look, it's, arguably rising just a little bit ever since it went into negative territory again. So that's another good example of weighted sentiment doing its job as an alpha metric. Last but not least, I mentioned FTX. I think it was on this chart. Yeah, so this is the largest positive sentiment spike according to this on the most recent day. Also notice the small numbers here. This is showing the 7-day average instead of the 1-day average in case you want to look from more of a long-term perspective. So looking at FTT, we see several over the past 7 days, major spikes, and there was a big one here, here, and eventually prices declined pretty big time. Of course, this is due to Bitcoin dropping a lot itself, but that's kind of the point. You'll see altcoins kind of doing the same thing as Bitcoin, but on steroids, major spikes one way or another. And FTX token was a good example of that. So the link is in the description for the Sandsheets model, as well as several of the links that I showed here today. Hope this is helpful to you guys. We'll continue to monitor the social sentiment as the FOMC meetings unfold these next couple days. And I'm looking forward to chatting with you more on our upcoming webinar and This Week in Crypto call on Friday. Talk to y'all soon. Be safe.